Welcome as we take you through some of the news headlines expected to break in the week ahead, the last full week of May, starting Monday the 23rd. Let's take a look first of all at some of the economic data that we're expecting kicking off on Monday. And in fact, this starts in Japan, where we've got a number of bits of key data out this week. The Japanese trade balance and the Japanese Nikkei manufacturing number out before the European markets get underway. Then when the European markets come, we get a number of bits of data out for the Eurozone, France, Germany, market composite PMI numbers. We've got consumer confidence as well across the Eurozone, and also the US market manufacturing number. Also as well, we get the UK GfK consumer confidence number. Let's look at Tuesday's data, and with the Eurozone theme continuing, you've got German first quarter GDP. This is a second estimate for the German growth number. German ZEW economic sentiment, France business confidence, and US home sales. Snapshot of Wednesday's news headlines. We keep on with the German theme with GfK consumer confidence. We've got the IFO business climate as well in the German economy. Then we have industrial orders for Italy. These numbers have surprised on the downside. We'll be looking to Italy to see if that theme continues. Bank of Canada comes through an interest rate decision about 1:30 UK time on Wednesday. We'll be looking there for the Canadian dollar and also any of the major other currencies trading in Canada. Of course, this is very much a theme on the commodity market. US market services PMI and the EIA crude oil inventories as well for Wednesday. Thursday, the G7 summit starts. It's a two-day meeting. This is the leaders' summit over the weekend. Ahead of that, we get the meeting and some of the headlines coming through from the finance ministers and the central bankers. But the leaders start their meeting on Thursday. And that's in Japan, where a lot more of the economic data is still to come that week, including the Tankan index. We got Spanish GDP, Italian retail sales, and a second look at the first quarter UK GDP number. And the US initial jobless claims and durable goods orders as well on Thursday in the States. And Friday, Japan, Tokyo and national CPI. This is a headline event ahead of the formal full country CPI data. German retail sales, France consumer spending, Italian business confidence, and a second look at the first quarter GDP number in the States, along with the Michigan consumer confidence number. That wraps some of the major news headlines to expect next week. Let's catch up with Josh now with some of the charts to watch here. When we're looking at the Eurozone, it's interesting, we've got a number of bits of data out for the Eurozone itself and also France and particularly Germany as well, which gives us a better indication as to how to trade the euro.
Yeah, I mean, I guess we'll be talking about the Eurozone, but ultimately you may as well be talking about Germany, because over half of the readings that are coming out this week are all about Germany. So certainly that's going to be in focus. But, you know, the big mover when you're looking at the economic data and the impact that's going to have in terms of the markets, largely going to be the euro. I thought I'd bring up the euro dollar because it looks like we could have seen a top in terms of the euro. This is on a weekly time frame. You can see it's rallied into, on this occasion, that 100-week SMA. Now you can see that essentially previously we've rallied into this 11715 and sold off. We got that very long upper shadow. Now what we've seen recently is something very similar. We've rallied into a similar kind of area of resistance, doesn't necessarily have to touch it. We've set that very long upper shadow, and the key thing here is that if we look on the daily time frame, you can see that we've actually now created that new low. We've broken below that 11220 level, and therefore that gives us a bit more of a bearish view. So yes, it looks like we're gaining a bit of ground, and we could actually see us gain some ground and move into this kind of area, but I think what has gone before, it almost looks like it's setting itself up for any gains would be likely to be sold into, and I do think this market is in the infancy of rolling over, so any upside is likely to be sold into. I do think over the next, say, few weeks we're likely to see some downside in terms of the euro.
What about the Japanese data? We've got trade balance, we've got the Nikkei manufacturing PMI, we've got the Tankan survey, which of course is a very influential survey out of Japan, and also the Japanese Tokyo and national CPI numbers. How do you trade that?
Yeah, I mean, Japan's massively in the news at the moment. Overnight, we're hearing a lot of talk about, you know, this sales tax hike. Are they going to still implement it? Are they going to push it back into the future? Are they going to actually, you know, put in another bumper round of QE or easing to accompany it and soften the blow? Ultimately, they already have a massive, you know, stimulus package over there, and we still remain within a place where, quite frankly, the economy is not necessarily doing all that well. CPI isn't looking that great, and that's what we're going to be seeing this week. It means, because of the fact that we've got such big figures coming out and there's possibly greater expectation of a rate hike, it means that the yen is going to come under a lot of interest. Now, bear in mind what's happening in terms of, say, equity markets also is heavily influencing the yen as well, because people sort of flock to it as a safe haven. This is the daily time frame that we can see here, and largely one of the things that really stands out to me is that you can see that we are within a very clearly defined downtrend. We continue to set these lower highs and lower lows on the way down. Now, of course, pretty much since the turn of the month, we have seen upside for dollar yen, and we've now come into this real key area of resistance. You can see we've got this 11066, so that's the support level from March the 18th, and that was a level that once broken saw very significant losses. Also, when we came back up, it was found as support, so we know that's a big level. We also have the 76.4. Those of you that will follow the trades or the sort of trading ideas that I do often will be looking for that pullback as a good entry, and therefore that gives us a good opportunity in my mind to think we could start to turn lower. And given that it's a 3-to-1 for this downtrend to continue, there is a good chance that actually we could come into a bit of resistance around about this area if we started seeing some reversal signals. And if I'm looking on the hourly time frame, it hasn't necessarily happened quite yet. If we started seeing reversal signals, like if we broke below this 109.69 and we failed to actually break up convincingly above this resistance point, it could start to create, say, a double top with the resistance area that we've got coming in play here. That could start to give people the belief that actually we're going to start seeing the sell-offs once more. So ultimately, one way or another, we're going to see big move in terms of the yen. We either see a return and a big move lower of that weakness that we've been seeing of late. Otherwise, if we break through this resistance, then we could actually be on a way to a real significant strengthening of the US dollar against the yen. So it's going to be a big week for the yen.
Next week, it'll be around about 4 weeks until the referendum, the EU referendum for us here in the UK. How should we approach this in terms of the trade there? We've also got GfK consumer confidence and a second look at the first quarter GDP numbers.
Yeah, exactly. So I guess, in terms of looking at the calendar, the big reading is going to be that GDP number, but second estimate, we don't necessarily know whether there's going to be any movement. Might be a bit of a damp squib. Now, looking at cable in itself, we have seen significant upside over the last couple of months. The difficulty of this is that we've also seen a lot of strength in terms of the US dollar recently. Most notably, this idea now increasingly that we could see some sort of rate hike in, if not June, but July, is giving some strength to the US dollar. So it's a bit of a battle between two relatively strong currencies here. And what we can see is yesterday we actually found resistance pretty much perfectly on this previous peak that we had here on the 4th of February. We've been turning lower ever since. But given the fact that I think personally, and the polls are looking this way, that we're likely to remain, I think this is likely to be seen as very cheap levels, and I still remain bullish for this market. However, the fact that we're turning lower could actually provide a good opportunity. Now, we see that largely we saw this big rally higher. We're seeing a little bit of a sort of alternative head and shoulders formation, I guess, coming in play here. Largely, there's a lot of indecision. If we see any further downside, if we see, say, a move down to 145 or alike, that for me would be a good buying opportunity. I see pullbacks within a market that I have a view on in the medium term as a good thing, because that gives me a better entry point. So 61.8 at 145, or else a 76.4 if you can get it at 144.65, I think would be very good entries. Otherwise, people are probably going to be looking at this triangle that we've got in play here as well. So you'd be looking at a potential breakout either towards the downside in any sort of significant way. You can see previously it's not really held, or else a break up and start taking out some of these swing highs on the way out of this for an upside breakout. So whether we get that deep retracement or not remains to be seen, but I am bullish for sterling in the medium term, and therefore I do think that that is going to really come back to the forefront for cable, if not sooner, but later. So it's going to be interesting when that strength comes back. In my mind, I do think it will come back soon enough.
Okay, let's look at the corporate news headlines we're expecting next week. And as the earnings continue to drop back, we've seen a lot of the numbers now for this previous last quarter. Quick check on what we've got. Monday is a big day, in fact, purely because it's got Ryanair, Europe's largest discount airline. And this is a company that, to some degree, defies any sort of gravity. I mean, we've seen some rather negative figures come out from what has up until recently been a very buoyant market. We've seen EasyJet come out with some poor figures. Ryanair Holdings on Monday, looking there for details on full year. Corporate data out on Tuesday, including the pork manufacturer Cranswick. It's benefited a lot recently from people buying into this pulled pork phase, which people seem to be going through at the moment. Kingfisher, De La Rue as well out on Tuesday. Wednesday is really highlighted by Marks and Spencer. It comes out with its full year numbers first thing. Also Great Portland Estates. Dixon's Carphone, another one there on that day. Tiffany and Company in the States. Luxury goods. Interesting to see how they are performing. And on Thursday, Tate & Lyle, United Utilities, Daily Mail and General Trust, and we've got Lenovo in China and Dollar Tree and Dollar General in the States. That's some of the corporate news headlines Friday. Virtually nothing happening on Friday. Josh, in terms of some of the picks, I do want to start off, if we can, with the very first release on Monday morning, 6 a.m. UK time. Ryanair comes out with its figures. It's going to be a big number, or rather it's going to be a big issue, depending on which way it goes, but how big the number is in terms of its profit remains to be seen. But there's this background of the worry about the travel around Europe at the moment with these terrorist attacks.
Yeah, exactly, and we saw that with Thomas Cook. They actually left out some of the figures from the likes of Turkey, where I only just came back from, and quite honestly, it was quite interesting how dead some of these big tourist attractions were. There weren't really many tourists at all, and most of them were domestic. So certainly people aren't flying to the same extent that they were previously. We've also heard people saying that there's some worries about Eurostar. People actually worried about that, and quite honestly, if you don't want to get on a train either, then it's not a good sign for the tourism industry. Nevertheless, it is a company that people have, throughout the years, really seen some significant gains. This is the weekly time frame. You can see exactly that. I mean, really, it has been on a very heavy ascent, and the pullbacks have been relatively minimal. I would say that this move back in 2013 was probably the biggest challenge that we had so far. Now, largely throughout 2016, we've been drifting lower. Obviously, it's against this backdrop of, the potential for people to stop necessarily flying as much. But I do think that, people are going to continue to use planes. Yes, they might have a period where people are a little bit more hesitant, but ultimately people are going to return. And if people return, generally the kind of companies that they would go back to first are the likes of Ryanair, in my opinion. And therefore, I think that they're likely to see further upside to come. This is a weekly chart, and you can essentially see that we have been trending lower, yes, but we've got this 12.55 underpinning any downside for the time being. On the daily time frame, you can see this a little bit more clearly with the fact that we have price action largely tracking beneath this 50-day SMA over the last, say, 4 to 5 months. We saw a brief foray above that, and then it sold off once more. So we have essentially this descending triangle formation. A break below 12.55 would certainly be worrying. You'd be looking towards this sort of 11.03 kind of mark. Alternately, if we did see a break back towards the upside, I'd need to see a break and close up above 14.55 for me to actually think that we're going to see another leg higher for this company. But I guess, if anything's going to be making these big moves and breaking through either big support or resistance, then it's going to be sort of earnings releases. So it's going to be very interesting to see how this plays out, and some people possibly going to see this as a time that it was relatively cheap, because the trend certainly is towards the upside, and I do think it will resume soon enough.
Okay, let's stay in London. Marks and Spencer on Wednesday. This retailer has been very much at the forefront of the concerns about the way in which it's spread its business. It's doing well in food, not doing so well in what remains its core business, which is clothing.
Yeah, certainly, and it feels like it's been that way for a while. They've been trying to fix the whole clothing business. Meanwhile, the food side of the business is really faring well, and if you look at the chart, it doesn't necessarily look that great, quite honestly. This is the weekly chart, and what you can see is we have seen this sort of rising wedge pattern. You could call it a channel if you wanted, but ultimately we've broken out of that now, and we have also found new resistance on that previous support trend line. Now, we've hit it twice, and while we are rallying at the moment, we're coming back into it, and it's also likely to be accompanied by that 200-week SMA. So you've got massive resistance here around about 455 that I think if we come into it, we're likely to sell off once more. Ultimately, the pattern that we're actually forming now is an ascending or rising wedge. Now, a rising wedge is a bearish pattern, and therefore you would expect, despite the fact that we are creating these higher highs and higher lows, you would expect the breakout from this to actually come towards the downside. So personally, I would see it as a better selling opportunity around about this 450, 455 to at least break back down towards this trend line, but alternately it could actually break back below it and sell off quite heavily below that sort of 392 mark and lower. So yes, we are moving higher at the moment, but all things remaining equal, we don't know how the earnings numbers are going to come out, but this is looking a little bit bearish, and it could look like we could see another leg lower for Marks and Spencers.
Okay, as I said, earnings are beginning to wind down for this particular quarter in the States. Some of the stragglers on from the quarter of HP, formerly known as Hewlett-Packard. Of course, it's now split into two companies, HP Enterprise and HP itself, which is computers and printers. Give us a trade for HP.
Yeah, so we'll look at the daily time frame on this. You can essentially see that the last few months have seen a big rise at the beginning of the year, came up to the back end of March, and since then has literally just been falling ever since. Now, the crucial thing here is that we've now set this new lower low, and we've also set a lower high. Now, we have broken through that 1552, but we've now rallied back above it, and therefore we have to look in a little bit more detail to see exactly what's going on. This is the hourly time frame. Yes, we're rallying, but you can see that previously we've been setting these lower highs. I would expect any rally into this sort of 1587, 1590 or 16 kind of area, anything around there, I would expect us to see another leg lower, if only for a move back down to 1552. So yes, we're seeing some upside for the time being, but I'd personally prefer to sell it, put my stops up above sort of 1623 kind of mark, and then be looking for a move back down 1552 and 1540 and next support levels towards the downside. But certainly if the trend over the last couple of months or anything to go by, we'd expect this rally to be short-lived.
Yep, okay, that's for Hewlett-Packard Enterprise, one of the two stocks for Hewlett-Packard, HP I should say, reporting next week. That's it for our look ahead to the week starting Monday, the 23rd of May.